Here are my China market trades last week. One of my assigned options was a China Unicom call. At the called strike, I realized capital gain on the stock of 15.5% in local currency. Including prior China Unicom transactions in SGD, I have realized 23.4% total gain, a total of 8,181 Singapore dollars, including 18.4% from capital gain and 4.9% from options. China Unicom is currently trading at 2.2 times forward EBITDA thanks to its significant cash stockpile. The business continues to be growing its revenue and EPS at a healthy rate. While I still think it is undervalued, I have a 107,120 Singapore dollar position in China Mobile, which gives me exposure to the sector. In case China Unicom dips down again, I may repurchase or sell puts, but I won't take action now. For other Chinese shares after my Ping An Insurance puts expired, I sold 5 times 500 puts at 45, expiring June 27, for 2.6 Hong Kong dollars per share, or a net value of 1,118 Singapore dollars. This equates to an annualized yield of 23.1% on the strike. I am not in love with this stock. Despite the growth, it is not obviously cheap. However, it has an excellent options premium yield. I also sold another round of 12x 1000 CITIC puts at 9, expiring June 27, for 0.32 Hong Kong dollars per share, or a net value of 658.27 Singapore dollars. This equates to an annualized yield of 13.2% on the strike. This diversified group pays a 5.5% dividend and is trading at just 4.2 times forward earnings. I sold another 2 times 100 Tencent puts at 470, expiring June 27, for 13.4 Hong Kong dollars per share, or a net value of 458 Singapore dollars. This equates to an annualized yield of 11.5% on the strike. This tech major is trading at 14.4 times, despite the recent recovery in its stock price. I believe that China's equity markets is still near the beginning of a long-term upward trajectory, and I would be happy to own this if the price dips and it gets put to me. I also sold another 10 times 2,000 Xinyi Solar calls at 3.5, expiring June 27, for 0.13 Hong Kong dollars per share, or a net value of 445 Singapore dollars. This is an annualized yield of 16.7% on the current price. This major solar panel manufacturer has suffered a share decline over the past several years. It is now trading at just 8.1 times forward EBITDA. That's why I bought it. I am now selling calls not because I want to get out, but because I want the extra yield to boost my overall returns. I sold another 6 times 500 Alibaba puts at 120, expiring June 27th for 6.34 Hong Kong dollars per share, or a net value of 3,272 Singapore dollars. This is a 21.1% annualized yield on the strike. Alibaba has been trading pretty low ever since Jack Ma had a dispute with the government related to Ant Financial. Recently, he has been welcomed back in the fold, and at the same time, the business has made some great AI progress. While I already own 44,000 Singapore dollars worth of Alibaba shares, I would be happy to have more put to me if the stock dips. In the first quarter, I sold options for 124,397 Singapore dollars. I realized capital losses of 20,702 Singapore dollars, and I collected 7,578 Singapore dollars of dividends. This quarter provided annualized realized cash of 26.2% on capital deployed. If you would like to gain access to all my trades as soon as I have executed them and see all of my current positions, you can subscribe at jonathanfine.com